Hello, everybody. We decided to do an impromptu live session here to talk about the markets. There's obviously a bunch of things going on. There is the word of a large in-the-money call spread being unwound, and as you can see on our screen here, we have the ES. This is the S&P Futures Live, and that has obviously dropped fairly sharply this morning. The deltas have turned around, so these are the negative delta tradings as call sellers and put buyers. That is slowly starting to turn around. 4,700 is our large gamma area, so we would expect some mean reversion back into that level. But this definitely caught the market a little bit off guard, and we think what a big driver of this was Tesla, actually. And if we flip over to the Tesla chart, the data is coming in so fast on this Tesla chart that our prices aren't quite able to keep up with it in this bookmap system. But if we flip over to the stock chart, you can see that we had this really sharp drawdown down to around 1030. The stock reverted back to 1100 and is kind of holding in that general vicinity. But if we look at the heroes, obviously this price chart is a little stale. You can see the heroes are negative, but this is not sharply massively negative, right? These are low, but this isn't like Armageddon. So what we think this is this highlights the general lack of liquidity that we see in markets. When there is a forced seller, whether it's an option-tied trader or someone needs to cover a short or implements a large short position, they do it quickly or they need to sell quickly. The liquidity is just not there to absorb those types of sales. So this can create this volatility that we're seeing. Again, if you look at the live data here, you can see that the heroes are negative. This again indicates put buying or call selling, but this is not a massive number. To put this in perspective, we saw call readings in the positive 90,000 last week for just Tesla alone, and so that is the type of flow that you can see when things are really moving. So the kind of concerning part here is that it is really a lack of liquidity that we're seeing, and the same goes for the E-minis. If you guys see this chart here, again, we're looking for mean reversion back up into this 4,700 area in the S&P, but this liquidity vacuum here, right, is a concern, and it's something that we've talked about before, and going forward, it's something that a lot of traders should be concerned with, right? The fact that the market can just hit this vacuum, hit this void, and you can argue that Tesla, helped to really drag down the S&P in this case, right? That vacuum, that 10% drop. Yes, it's only a 20 handle drop in the S&P, but there's a confluence of events here that seem to really hit. So if you have some questions or comments here, we did this. We didn't give anyone an alert here that we're going to do a little bit of a live session here. If you have any questions or comments, we're more than happy to take those. So just pop those in the chat, and we will be happy to answer those questions. But we wanted to flip over to the Equity Hub just to give an update on some of the live data that we saw coming in this morning in terms of where we saw the S&P, where we saw Tesla, for example. So let's bring up Tesla again. This is our Equity Hub tool. So there was a lot of gamma forming. We put this out on Twitter this morning that really what our biggest concern was is that put gamma had exceeded that of call gamma. And you can see that in the chart here by the fact that this is our volatility indicator. But what I really want you to show you here is that at 1150 where we opened this morning, and certainly down into this area, you see a very light shade of red here. And what that's telling you is that this is put control. This area is put control of stock. So what that means is that last week this chart would be all green. If we had rallied over 1300, you see this area of the chart is green. That's telling you that calls are in control. That's where you get a call gamma squeeze, right? Here what we're getting is either traders are long or short puts. Either way, if the stock starts to drift lower, that can squeeze traders out. And the fact that we saw these deltas as negative, right? The fact that those deltas were negative is telling us that people are buying puts or selling calls. So that's going to, in effect, create almost a squeeze lower. And when we have very poor liquidity, you kind of end up with this situation, right? You end up with this liquidity vacuum. And that's kind of what we saw here. So again, we hit down to around 1030. And what's so interesting about this 1030 price area, which is down around in here, is you can see that it starts to invoke what is this increase in essentially the change of gamma. So you can see that here at the bottom, you can see that there's a big jump in this indicator on screen right here. And that's telling us that the gamma change is significantly there, and so we expect hedging to really come into the market in a big way in this level. Now, most of the call options still sit at the 1,000 level. I don't think Tesla can break that level, or I should rephrase that. Tesla could, of course, break that level, but that's where I look for major support in the stock. This hedge wall is a proprietary indicator, which is a major support area. So, there's big support in and around this 10,000, 1030 area. And that should feed back up into the 1150 region. If I had sort of expectation, I think the selling is done, and I think we could get a little bit of mean reversion here. Now that's for today. As far as what the follow through is, we're going to see how the position all shakes out. If we look quickly at where the market is trading, I just want to check another system here for the Tesla options. So far today we've traded 367,000 calls, 310,000 puts. So it is not a terribly large volume day. I mean, I guess we're an hour into the session, but that is pretty even flow, obviously. So again, it's an interesting liquidity vacuum that we're really placed with, and kind of as we mentioned at the top, sort of the initial on the broadcast, we're looking for the S&P to have this reversion to the mean. You can see again the deltas sell very sharply, and when those deltas stop, when the deltas turn around, they're getting bid now. This is call buyers or put sellers, and this is showing here we go. The market is now catching that bid, right? The overall market. L1 is our largest gamma area. The call wall is obviously 4,700, so we've been saying in our subscriber notes, like, this is the pin area. We certainly didn't think we were going to get this opportunity to sort of play a dip this drastic, but again, this Tesla drop, and I apologize for the stock price not being live in the bookmap system here, but the deltas you can see now on Tesla are also turning around. So this is saying that the call buyers or put sellers came in either way. If you were long Tesla puts this morning and that stock went to 1030, you'd be kind of crazy not to close that put out, right? That's a 10% gain in 20 minutes. So you want to take advantage of that elevated volatility, right? You want to take advantage of that delta move, the price move. You want to close your put. When you close your put, dealers who are short puts can buy back the stock. So this is all kind of the fundamental, cycle, so to speak, of evolution, right? Put buyers come in, the stock goes down, great. I can close my puts, and that puts a bid back into the market. So that's kind of a move. Good question on Elon, selling stock. There's a couple issues with that. We're trying to do an analysis on Tesla here, right, to figure out what the actual free float is of this stock. Now, they have 1 billion shares outstanding. About half of that is owned by institutions. So think, the Vanguards and State Streets of the world who own the stock because there are a lot of passive index holders, right? If you put money in your 401k every week into an S&P 500 fund or the like, you own some Tesla synthetically or kind of directly through that purchase, right? So every week, more money comes in, 401k retirement money, they buy. There's a lot of retail holders in the stock, obviously, and just also institutions who like the name. They want to own it because they think the stock's going up. So what is the actual tradable float? At best, it's 500 million. It's been unclear to me if you need to take Elon's shares out of that equation. He has 2 million shares, I believe. So if you kind of extrapolate this, I think that there's somewhere around 200 million shares of tradable float in Tesla. What does that mean? On any given day, there's 200 million shares available for buying and selling at various prices. Now, last week we were trading 40, 50 million shares a day in Tesla stock volume, and we had 5 billion notional on one day of options trading. So that invokes a lot of delta hedging, and that's forced buying and forced selling, right? If all sorts of people come out and buy calls, Citadel or wherever else the options market makers are, they have to buy stock to hedge, right? It's the same as a short squeeze or a margin call, right? You got to buy it, you got to sell the stock, you got to buy the stock. You don't care what the price is, you got to keep up with it. You got to make that move, and that causes these real volatile moves. So again, when you see that hero drop, there's just not that much free float. There's not that much stock available, and you get these liquidity vacuums. This is the same function that pushed the stock up. It's the same function that dropped the stock here. There doesn't necessarily have to be real news. There doesn't necessarily have to be anything in particular, but you get these kind of outsized moves. And again, here, if we look at the S&P, we're now kind of back to the general target zone. Any comments on the Trojan horse speculation? James, I'm assuming you're talking about the idea that the Tesla volatility leaked into the S&P and that can kind of break the S&P. I've been thinking a lot about that, and what I really end up with is the fact that it's a liquidity situation. It's really just what I explained, right? Tesla is kind of the ultimate meme stock. It's the king meme stock. There are people who believe wholeheartedly in the name, and they should. Who am I to tell you, you're right or wrong for that view on the stock, that it's, going to triple or quadruple from here. But it's the king of those stocks because it is, what is it? One of the top 5 names in terms of size in the S&P 500. You got the leader of, the free world, Elon Musk, saying all sorts of things on Twitter, right? And is very active in the market. He knows what the price of his stock is. I think he knows how to squeeze his stock. So, yeah, it can invoke volatility in the S&P 500. And I think what the Trojan horse is that there's not much liquidity in markets. And so when you have that size of call buying or put selling in Tesla, and it's going to really be a tail that can wag the dog in terms of liquidity. Do I think it can have, can it implode passive investing and the like? I mean, I think there's probably a scenario, that could happen. But if you just sort of examine the Russell, and GameStop and the like, I mean, you would want to extrapolate that, and obviously Tesla's quite a bit bigger, but I'm not sold on the idea that it could break passive investing as we know it. I think that's like a tail risk that could happen. But even if Tesla doubled or tripled, the way that indexers are adjusting their flows and the like, it's a bit curious. Now, the situation I think is a little more interesting is if you have just rampant call buying in the S&P 500 at large, you could have a situation where the VIX, in theory, could break like 100, right? Because so many people are out to buy calls. That would be a crazy scenario. But I mean, look, think about it here. Tesla vol went up, IV went up, GameStop call because of call volatility. Implied vol in GameStop was 300. So if you're going to work that into people buying S&P calls, could you have a situation there where the VIX spikes meaningfully on call buying? Yeah, that would be kind of a crazy scenario. And so I think that's what people are trying to get at is like, well, if all of the index components get a crazy bid to their calls, would that, through correlation, mean that the VIX or the S&P call vol goes up and volatility at large goes up because of call buying? And I think it's possible. I mean, this market is really quite wild. You want to see a view of AMD. So this doesn't save the historical view, but we can bring up currently what's happening now. Sorry about that. We'll bring up AMD live for you guys to see. The exchange is not showing up correctly here. There we go. We'll have AMD loaded in here a second. Again, for those of you who are just kind of coming on now, we were looking for this mean reversion move. The deltas went from negative, which is this line down, to positive here. We've fallen short of zero, so it seems like the market's finding some light resistance, and it's equilibrium a little bit south of this call wall area, but 4690 is kind of where we would say, hey, we see fair value of sorts in this market. And the Tesla deltas are going to update here in 1 second. Yeah, they're still negative, but you can see the fact that this white line is not shifting lower is telling us that there's not new deltas rolling into the market, no, new put deltas rolling in the market. So the stock, at 1100, you can argue that it's kind of probably found a little bit of an equilibrium here. There is a lot of open interest at this strike. Again, if you look at our charts here, you can see 1200 was the biggest open interest strike to start the day in terms of gamma, but there's a ton of calls. Excuse me. The biggest open interest strike is 1000, but most of the gamma was at 1200 to start the day. So we've kind of pulled away from that zone. If we look live at what is trading in the Novembers, we have 20,000 open interest at the 1100 strike. We have 20,000 volume at the 1100 strike. We have 20,000 volume at the 1150, and we have 35,000 volume at the 1200. So that stuff is really stacking up. On the put side, we have 15,000 at 1050 and 22,000 at 1100. So considering how sharply the stock dropped, if we look at what the deltas are doing at the moment and where the stock is priced, I think I think I'd look for some mean reversion here, particularly if the hero signal that is this data here starts to shift materially positive. But again, the liquidity issues are what we really find most concerning, in that not much news is found to really make this stock drop pretty far. Ethan, thank you very much for the comment there. We're glad we can help you process. What are my views of options expiration? So, this morning, if we're going to talk about the S&P kind of at large, we put out an analysis, and our basic view here, and I'll bring up our subscriber note, was that we looked for a very tight range trading today. So coming in today's market, we only looked for a maximum move of 30 points. And obviously, I don't know what the low was in the S&P there. I should look at the SPX specifically. You can see here that we traded only down about 25 handles, as you can see here. So, and that's 25 points. We strike that off the open. So if the open is roughly around it's 47.06, you take 30 points off of that, and that's basically where our low was for the day. And what's interesting about that one-day move is that sorry, I delete these lines here and hopefully bring this chart a little bit bigger. The idea with that is that there's a hedging band right around where dealers need to hedge. And so that 30 points for today is kind of our extrapolation of where, based on how much gamma there is, where dealers should come in to buy or sell. And that's why it's a max move on the day and not a close, because we think down 30 points we should see a bid come back into the market, right? That's kind of the idea with this max move on the day. So a max move on the day of about 31 points. So far today, that's held in check. We obviously had the really big levels, 4,700, and again, the market's kind of clipping back up into that area. But the specific question was on next week. Now, at the moment, we see roughly 20% of gamma expiring, and that number is going to change a lot for next Friday's expiration. The November expiration is typically not a big one. The big one is the December expiration. But what's interesting here is we have this very big divergence, and we talked about this in our morning note a little bit, but what you see here is what we call our put wall, and this is where most of the put gamma is in the name. And then the red line, and apologies if this is a little tough to see, but the red line here, which is right against the S&P price, is what we call our call wall, and that's where most of the call gamma is in the stock. So the market's pressed right up against the call wall at the moment. So the call wall in this case is 4,700, and we're right there in terms of the in terms of where the S&P is trading. But what we really find curious, and as we go into options expiration, this is what the question is about, is we're going to get gamma rolls off, right, and somewhere around 20% roughly of gamma, which is enough to shake things up. But what is concerning to me is this divergence. So this yellow line is our gamma flip indicator, and then obviously I mentioned before, the green dot is the put wall. You want to see these levels pressed up against where the current market is, because that's telling us that the market is pretty well hedged, right? And hedges are a good thing for the market. When there are hedges in place, if the market sells off, people can close their hedges, and that helps, like a short cover rally, to keep a boost in the market, right? It's a protected market. When you see these divergences, it's telling us that something's wrong, right? Why aren't there more hedges up closer? That could be for a few reasons. One, people just think the market's going to go up, but two, the market can be stretched to the upside. So how does that happen? Well, if you get like a run of call gamma, right? Think about all of these moves. I mean, look at some of these stocks. It's really pretty shocking. Not just Tesla, but you had Nvidia over the last week. I mean, look at those prices. AMD is another one somebody mentioned. There's a myriad of stocks that just had incredible gaps higher, and this is reminiscent of the August of 2020 rally in the market. So, if you remember, in August of 2020. There was this just crazy, that's this period in here, there was this crazy bid to the market. Apple was going to split. Tesla was going to split. There was the worries or talk of SoftBank and their gamma rally and all this kinds of things, right? And the market's up 10% in a month. That's exactly what is happening here. And then we had the stock splits were announced, and then bam, we had the S&P was down. Excuse me, that's kind of this run here. The S&P was down in a flash, right? In the matter of 2 weeks, we had unwound that entire move, and then we spent the rest of September kind of in the dumps, right? Until we had a pretty good October expiration, and then there was a market rally. So that is kind of the situation that you could see set up here, because what we're doing is we're stretching, and I apologize for having so many indicators over this chart here. Maybe if I flip the SPY, you can see a little bit better. But we're stretching to the upside and we're overrunning maybe the hedges a little bit too much. I mean, you can see here, this is that move that we're talking about, right? And my put wall, or excuse me, my gamma flip indicator is all the way down here. So, you know, that's a good 120 handle move down to that, you know, 3%, just down to my gamma flip line. So there, that divergence again, that gap is concerning. And you can see here that the last time I could see anecdotally looking at the chart that there was such a gap is that August period, and you can see very quickly the market comes down and all the levels kind of sink back up. So, you know, that's kind of what we're looking at right now is something that's concerning. It speaks more to exuberance of the market as opposed to an issue of, hey, you know, the market's got to correct for some other structural reason. Now, you know, it looks like the Fed is going to change. Are there some tax issues going on? Is there, you know, other macro concerns? Could be. Not my, you know, I'm staying in my lane specifically and talk about the options market. I just see that there is this gap in divergence. You know, the VIX, as we mentioned before, the VIX has caught a bid the last few days. I don't think that signaled this trade this morning, the fall this morning. I think we hit a liquidity node between whatever this in-the-money call trade is that people are talking about, and Tesla just hitting a vacuum, right? And that can lead to other selling. Yeah, so Mays, that's a good point. He says, doesn't the VIX term structure moving up provide more Vanna fuel in the end of the day? And that, you know, look, that's a good point. If this was just a liquidity vacuum, right? If this market sold off simply on the basis of, you know, one guy came in and wanted to trade, well, this just spiked vol a pretty good amount, and this is the unwind, right? Call buyers step in and or they close their puts. As vol comes in, you know, puts lose value and the market mean reverts. So it's, you know, you bring a good point, and that's oftentimes what you see. I think the market will consolidate or pull down some, right, and that provides the spring to reach the next level. So that can be a really interesting, you know, trade here. We've got a little bit more of a bid to vol. Now the Vanna trade is stronger, right? And as we kind of pull up into that 4,700 area, if we make it there another 10 handles or so higher, that Vanna should bleed off, you know, really rather quickly. Where the floating hearts button on this thing, I can't tell you. Ethan, parabolic moves and rocket tops are never a good thing to see. You know, I kind of tend to agree with that. And for those of you who missed, you know, the top of the chart of the talk, excuse me, our view on what is causing all this squeeze is our lack of liquidity, and then you have forced buying. So anytime you don't have a lot of float, again, we're talking about Tesla and not many tradable shares, but I think the same thing works for Apple. You know, think about Apple. You know, the pension money that owns Apple. You know, for indexing, you have the huge stock buybacks, right? All of that is taking tradable float away. And so when you have call buying, dealers need to buy stock to hedge themselves. When you have short covering, you got to cover, right? You don't have a choice of waiting it out, and you need that liquidity. And there's just less liquidity, so that makes price move more. And I think that is a lot of what we see in these parabolic moves higher, where there's a scramble for calls, there's just not much liquidity, and we get these parabolic moves. It's a signal that liquidity is really pretty poor. Let's check out the AMD signal now here. Now again, unfortunately with Bookmap here, we do not have the AMD signal flowing in live at the moment. Not sure what is going on there. We are building out Hero for our website. That's something that's going to be live in 4 to 6 weeks. So we'll have the replay of the whole day signal, which is something that's going to be really helpful. And we will push out, if you subscribe to our email list, which is at spotgamma.com, we'll be pushing out data information, not data, but release dates for that product, the Hero product. Yeah, subscription content sounds pretty interesting. Let's see. Sorry, this is again. What does the rate of change in gamma on the equity hub line tell us? Yeah. So let's take a quick look at that. It's a good question. So what is the rate of change of gamma? That's called speed. It's basically the third derivative of gamma. And the idea is that when there's a large change in gamma, that is a point at which dealers will have to act, or they should act, right? They should make adjustments into what they're doing. So if we bring Tesla back up here, what this is showing us is the rate of change of gamma. And so when gamma is changing a lot, that is giving us an idea. These nodes are telling us where there's an inflection point at which gamma hedging should adjust or should change. and that could be support or resistance in the stock. So we'll give you an example here. I mean, this morning, we're talking about how you can see this momentum indicator change, right? This is telling us that there's a lot of volatility in here, but the fact that this is shifting up, that the signal here goes higher, and don't think of this as a stronger or weaker signal. Think of it as just a change, right? This change is telling us that gamma hedging has to change, and this could be a support area because of that. There's a lot of options positions down here around the 1,000 line, and that's why you see the momentum indicator pick up. Gamma gets higher as we move into the 1,000 strike. The rate of change of gamma increases, and so when the market gets down into this area, it's likely to invoke hedges. And that is what makes this kind of a slippery slope, if that makes sense. The rate of change of gamma grows as we go into 1,000 because 1,000 is where most calls are, and that's where the most deltas are. In other words, there's huge options position there. So if you ever look at a chart of gamma, right, it's like a bell curve centered around the at-the-money strike. So think of this as the slope, right? The speed of hedging increases as we get into 1100, and that speed remains as we flush back out, as we kind of bottom and the hedges kind of unwind or adjust. So that's really what this is showing or monitoring. We showed a chart on Twitter which has a different view of this, which shows two explicit curves, call and put gamma as individual curves. And I bring that up in a minute, but the other thing to note here is that the fact that this chart is all lightly red is telling us that it's mostly puts that are in control of the stock until and unless the stock breaks basically 1275. So this is all about puts. This means that you can squeeze lower, people cover puts, stock can rally again. There's a decay trade. I don't know how many people were short puts and had to kind of scramble for cover, but all of that is part of the dynamic at the moment in the stock. It's not the same dynamic today that we had last week and the week before. This is about the stock trying to recover back to the high gamma area as opposed to the stock breaking through the high gamma areas and kind of running away. Yeah, let's take a look at AMD here quickly. AMD's just had, the stock price is really pretty unbelievable. It's gone just parabolic if we kind of zoom back a little bit. It's hard to sustain these kinds of moves. It doesn't mean that you have to be bearish or not like the stock. It's just, sustaining this move is kind of hard. Look at this again back in August, right? Parabolic, and then you kind of unwind some. So if we look at the AMD stock price specifically, you can see there's a big concentration of positions at 150, and a fair amount of this expires on the 12th. This 28% is not a lot for a single stock. A lot would be certainly north of 30, but more towards 50%. And so this is kind of our resistance line here. This is what we call our hedge wall. And if we scroll down, you can see that in this case, there's a fair bit of gamma position above. So these are likely out-of-the-money calls that would invoke some movement if the stock moves up. But you can see here, this is all bright green, right? And so now, if the stock is coming down, that's likely a lot of call decay, right? Because call volatility is likely high because of the moves that we've had recently. And so you're going to get call decay, and that's going to kind of keep a cap or push the stock down if the stock stalls. This is about movement, right? If the stock stops moving, this is energy. The energy comes out of the stock, and like a balloon losing air, it comes back in. Now you get a move today. There's got to be people checking charts and thinking, okay, it looks like there's some weakness in the market here. What names are ripe for kind of a pullback? And unfortunately, I look at a chart of AMD and think to myself, this had quite a move, right? Stock could have a nice 10% pullback and still easily hold its uptrend. And in fact, one may say that a pullback or consolidation here may be kind of good for it. So the other thing I like to do, I know I'm flipping around a lot, is I like to look at this history. This wall moving up is a bull sign. If this moves down, that's a bear signal. So you can see we've gotten consistent moves higher. I would suspect tomorrow we'll see this figure drop. And the same thing with the key gamma strike. It keeps shifting higher. The call volume, obviously, yesterday was really quite big. Mondays are squeeze days, right? And they typically have the highest call volume. And so you can see this is squeezing up. And so, this is everything. These are all the components of a bull move higher. It's just you don't know when that move starts to stall out. And the issue is, again, we have one now red candle. It's 1 day of down movement. But clearly there's a little bit something different in the market today, right? That drawdown, that liquidity, that gap we showed you before after some of these big moves. These are all signals that maybe some consolidation is due. And you want to look at some of these parabolic moves and think to yourself, well, if this thing is going to take a break, right? If this thing wants to take a rest, look at where most of the call open interest is at, 105. I mean, these are big strikes. 105 strike is a huge strike in AMD, and that's still plastered way down here. So there's a lot of in the money calls, is what that's telling me. There's a high delta trade here now as the stock has gone higher, and so you can have some pretty violent unwinds in the context of some of these bigger moves. So I hope that's clear. Again, I have no view on the valuation of AMD. I have no idea if it's worth it here or not. But you can see this momentum, and when the momentum shifts, there's a lot of hedges that now need to come out of the stock, and you can tell that just by the fact that this 105 is where most of the call open interest is in AMD. Let's see here. I'll take one or two more questions. So in the case of NVIDIA or AMD, they're not shorted stocks or high. So, well, think about this, right? If you believe in call gamma squeezes, and it's a fair question, but if you believe in call gamma squeezes, dealers had to buy stock as the name is squeezing because people are buying calls. When those calls lose value, when those calls deteriorate, market makers are the short sellers, right? They're the long sellers. They got to unwind all the stock they bought. So if you believe that they own a lot of stock because of the fact that most of the calls, the largest call open interest is 105, and it's likely, when you have millions of calls or hundreds of thousands of calls trading every day, that a lot of what caused this rise was call buying. Then there's probably dealers holding a lot of long stock that they can sell as these calls decay. And so it becomes a cycle, right? You get dealers buying, and the stock goes up, people buy more calls, it's the game of squeeze, right? And then the reverse happens. Now traders got to come in the face of falling implied volatility as the stock goes down, and dealers are selling as the stock goes lower. The weight of the whole thing now is turning on itself, right? It rolls over on itself. The tailwind turned to a headwind. So to get this thing to re-squeeze now is tricky, right? The momentum, it's like trying to push a rock back uphill. Well, the momentum is lost. So you want to wait for signals of the move flipping or the move changing around. Differential equations, yeah. I'm gonna stay away from that one. That's kind of funny, James. All right, everybody. So we're gonna leave it at that. We got a lot of things to kind of get to here over the next hour. We hope this kind of pop in was quick. Thank you guys for joining. I mean, we didn't give any heads up to anybody, but we felt it was a good time to kind of talk about markets, talk about what we're seeing. Should note that we are seeing some negative heroes now. Some negative deltas coming to the market, which is not a great look if you are long equities at the moment. So some people might want to check that. Again, this is indicating that dealers are starting to have some negative deltas to hedge. So put buyers or call sellers possibly stepping in there. Take one last look at the Tesla heroes as well. And again, sorry that the stock price here is not updating, but yeah, Tesla heroes are turning kind of negative again. So it looks like a lot of people played that first bounce, and we may be setting up for a little bit of a shift lower. So if y'all have any questions on this video, leave the comments, leave some comments below, or put the questions in the comments below. You can send us an email at info@spotgamma.com and at spotgamma on Twitter. Thanks, everybody.